In today's stock analysis, we are going to examine the key pillars, look at past results, see what the analysts' predictions are, create a valuation, and review then rate the company. Today we are going to look at Novo Nordisk, ticker NVO. Let's dive into the process I follow when reviewing whether or not to invest in a company. After I've collected all the financial information, I then analyze what I consider to be the 12 key pillars. These pillars are based on the insights and teachings of the best super investors and what I consider to be the key metrics when evaluating a company. Ideally, we would like to see each of these metrics achieve or exceed a specific target. Companies can earn 1 point for fully meeting the target or half a point for coming within 2% below the target. The first pillar is earnings per share growth. This is where we take the net income and divide it by the shares outstanding. For Novo Nordisk, earnings per share growth over the past 12 months is 16%, exceeding the 10% target, scoring 1 point. Next, let's look at free cash flow growth, which measures the money a business can generate from its operations. Warren Buffett emphasizes the importance of strong financial health and prefers companies that can generate substantial free cash flow. Novo Nordisk's free cash flow growth is 20%, exceeding the 10% target, scoring 1 point. Next, we come to revenue growth, which tells us how good the company is at generating income before deducting expenses. Novo Nordisk's revenue growth is 20%, exceeding the 10% target, scoring 1 point. Now let's turn to book value growth, calculated by subtracting total liabilities from total assets to indicate equity growth for the company. Phil Town believes book value growth is the most important metric, as it has the interest of the shareholders at heart. Novo Nordisk's book value growth is 29%, exceeding the 10% target, scoring 1 point. We then assess the management of the business by looking at return on invested capital and return on equity. These measures allow us to evaluate a company's efficiency at allocating capital. For Novo Nordisk, return on invested capital is 41%, and return on equity is 70%, both well above the 10% target, scoring 1 point for each. Now we move on to debt. Joel Greenblatt prefers companies that are able to pay off debt with their free cash flow within 3 years. Novo Nordisk's debt would take 0.61 years to pay off, which is well below the target and earns 1 point. With the information we have gathered, it tells us that aspects of the key pillars are solid, but let's explore the company further. Now let's look at the remaining key pillars which help define an excellent business. Let's look at the gross margin, which indicates how much money a company retains after incurring the direct costs of producing its goods or services. This is currently at 85%, exceeding the 40% target, scoring 1 point. Next, we come to the operating profit margin, which tells us how much profit a company makes on $1 of sales after production costs but before interest or tax. Peter Lynch prefers companies with strong operating margins when assessing their financial health and competitive advantage. Novo Nordisk's operating profit margin is 48%, well above the target, scoring 1 point. Free cash flow yield provides a more realistic view of a business's financial health. Terry Smith prefers companies with a free cash flow yield of 5% or higher. Novo Nordisk's free cash flow yield is 8.02%, exceeding the target, scoring 1 point. Next, we assess the 10-year book value growth as potential shareholders. For Novo Nordisk, this is 22%, exceeding the 10% target, scoring 1 point. Lastly, Bill Miller believes earnings growth is the biggest indicator of a company's stock price. Novo Nordisk's 5-year net income growth is 20%, exceeding the 10% target, scoring 1 point. In the description, I've included a link to the investors page in the annual report if you want to check it out for yourself. Novo Nordisk has demonstrated strong fundamentals across all major metrics, including high margins, efficient use of capital, solid growth, and a strong balance sheet. As of today, the stock is trading at $64.73. Over the past 6 months, the stock has experienced consistent downward momentum, due to missing its weight loss targets, and the rising fears caused by the introduction of tariffs. In the past, Novo Nordisk's stock price had shown strong growth, reflecting continued dominance in the global pharmaceutical market and expansion into key healthcare categories. Looking at the overview, we can see the current market cap is approximately $283.15 billion. They are currently generating $31 billion in revenue for the trailing 12 months and have 4.44 billion shares outstanding. At present, their earnings per share tell us that for each share of stock, the company is generating $3.14. Their price-to-earnings ratio is 20.20, which is slightly below the S&P 500 average of 22.10. According to Morningstar, Novo Nordisk has a wide economic moat due to its strong brand, innovation pipeline, and dominance in the GLP-1 therapeutic space. The overall consensus among analysts is a strong buy, with a 12-month price target of approximately $142. Analysts are forecasting an average EPS growth rate of 15% over the next 5 years. Let's calculate a valuation. I will use Novo Nordisk's current earnings per share of $3.14. Combining historical growth rates and future analyst predictions, I estimate an earnings per share growth of 18%. Assigning a forward price to earnings ratio of 20, projecting 10 years forward, and applying a desired return rate of 15%, this results in a future stock price of about $329. The current intrinsic value is about $81, with a margin of safety at $60.93. Since the current price is below the intrinsic value, this scores a check. It all depends on your personal view and outlook for the company, as well as the return on the investment you would like to see. When reviewing the key pillars, Novo Nordisk scored 12 out of 12, earning a check. Over the last 6 months, the stock has experienced downward momentum due to market fears and missing weight loss targets, which provides us with a potential buying opportunity, scoring a check. Analysts are predicting a growth rate of 15%, scoring a check. The current price is below the intrinsic value, signaling a check. According to Morningstar, Novo Nordisk has a wide economic moat, which scores a check. My final overall rating is 5 out of 5 stars. Novo Nordisk continues to show world-class fundamentals, impressive profitability, and long-term growth potential, making it one of the strongest stocks on the market today at a reduced price. Thank you for joining me in today's analysis. Don't forget to like and subscribe for more insights.